Good afternoon, namaste. So I'm Guillaume Rico. I'm directing CH&Co Augmented Consulting Practice. Okay, we are a management consulting firm, and actually we cater for building innovation capabilities for our clients, end-to-end, from the design, the ideation, to the implementation. I've been doing that for the past 10 years. I have worked with fintechs actually for the past 10 years. For instance, contributed to build the first fully native digital bank for an insurer in France. That was 10 years ago. And that was probably too early. We're going to talk about that a bit later. When putting this talk together, actually, with AJ and the team, we're thinking about giving a raw, kind of no-filter feedback on why some partnerships are actually failing. There are a lot. And to be very honest with you, I've seen more partnerships failing than being successful. The road is pretty long. We'll not focus on every point today. We'll not draw general considerations on what works, what doesn't work. But we'll give a few points along the way where we can probably improve. First of all, define the strategy. We'll see, sounds pretty basic. Where do I want to go? What's my budget? What do I want to achieve? How do I fit my fintech strategy with the business portfolio? A lot of issues with that. Second, set up a governance, a proper governance, and not only a team, but a proper governance, KPIs, a framework that allocate budget and foster innovation rather than putting him at danger. Third, the onboarding. Once we are ready, we have a team, we have a budget, we define a strategy, then we can onboard. And we can try on some proof of concepts, we can calibrate, test, innovate, and we can think about industrializing it, launching a product, or exiting properly this partnership. Obviously, there are many more points. We're going to probably focus on that today, and I think they'll be largely enough. So, the first, and actually the biggest mistake I've seen, that I'm seeing still today with a few of my clients, is to basically start talking with fintechs, bring them into your lab, into your incubator, your accelerator, start proof of concept, but having zero strategy whatsoever on where we're heading at. How do that fit with my product portfolio? How will that fit with my business strategy? I've seen a lot of empty space on that. I saw a few statistics the other day, and I wanted to share it with you to see actually how bad it is. On the left, when citing a KPMG study on why banks are actually partnering with fintechs, the reason number one is to enhance the customer experience. Now, I believe this is danger. So a bank who has thousands, sometimes millions of customers, getting the feedback every day on these customers, having marketing teams, strategy teams, they rely on a startup to tell them what's going on and how to build a better customer journey. I'm not saying the fintech brings it all, right? But the thing is, relying on a simple startup and willing to invest purely to get that, this is probably a wrong way. And this is probably because the job has not been done before. The job has not been done to understand why we invest in them and what we want to get out of this partnership. So that was a very first interesting statistics. The second one, which is on the same line, most of the banks that are actually willing to partner with these fintechs are doing it in one area, digital account opening. So a fintech can build, obviously can bring the technology, all right? But digital account opening, I believe we have a few people here coming from the bank side. Isn't it probably marketing? Like a real channel strategy, working with people that actually know how to tap into these markets. I was discussing with Deutsche Bank last time. They have a team dedicated to how to tap in certain channels on the millennials. So there's really something that must go on behind that, right? And seeing that statistics here is a little bit scary. Basically, let's do the technology, do its job, and then we'll see later, we'll think later. This is pretty much dangerous. So these statistics, why? Sorry, I'm going a bit faster. There are a lot of questions that we need to probably answer before, strategy questions. And these questions will not answer by themselves. It's something that comes up with the governance. I won't read them. You have them, you can take pictures. But basically, a real governance put in place with the right people, central governance, coming with a budget allocation that will tag every project, follow every project along the way with clear milestones from a proof of concept to the integration to the bank, to the industrialization, and follow up, putting at every milestone some monitoring indicators to see whether we are on track based on our strategy or we're not on track based on our strategy. And this can be done only also with the right people, with dedicated people who are actually doing this job on a day-to-day basis. The last one is pretty important as well. How do I exit a terrible partnership or something that doesn't bring the fruits that I wanted? This is something extremely important and something that I've rarely seen. We're focusing on whether it will succeed, but if I build a consortium, right, with a few banks, let's imagine a successful fintech. We have a few examples in mind, right? Building really famous consortiums. How do I exit? If you don't bring back basically the fruits. Implementing a dedicated structure that will be together with the business, together with the innovators, together with all the different types of knowledges that I have in my bag, IT, compliance, putting them all together in a central governance is key. And this is probably what we can drag from this first mistake that I've seen. Strategize first, build the governance. Now, there is probably a second thing that I've seen, is we focus a lot on, having big budgets, spend that money, trying to track some fintechs, onboard them, provide them a place, an incubator, giving them some resources, but we don't really focus with the right resources on detecting the right startup. And this is probably where there is a need of helping this company. It's funny because it seems like the fintech also know that. I was discussing with a friend living in London. He heads the fintech department of a Big Four. Okay? In one city, London, they have 1,000 applications for partnerships for fintech per year, obviously. All right? This is still huge. Still huge. So these guys are going through, third parties. Help me find the right unicorn. Help me find the right fintech that will actually execute my strategy. So how to find the right unicorn? I've seen a lot of models, and the one that I've seen that works the best is basically like a football club. You have a central team, a central innovation team, that is actually generally the one leading the strategy, owning the budget centrally, let's say, and especially in big international groups. Get the messages from the board and allocate some budgets. And now there is such a vast local fintech network. I'm amazed by what I'm seeing here in Mumbai, for instance. You go to the United States, you see Charlotte. Who thought Charlotte could become like a fintech hub? I don't know if you've been to Charlotte. So actually, it's becoming a reality. You have several local networks on that. And if you don't have the right people on site that will detect, that will have the right checklist, assessment list in order to push to the central head office all these guys, it will never happen. Another example, I was working for a French bank, very much French, a little bit in Asia, and they wanted to scout some fintechs in Asia. They didn't have the right structure, nobody here, they counted on us. The time we spent sending them our results, coming back, basically the guys, the fintechs, they were not answering us anymore. It's like, guys, it's too slow. I mean, you don't have the right people on site, we can't talk. Your guys speak barely English in France. So it was pretty tough. So setting up the right structure on site, this is key. Now, there is probably something that you guys have all seen. I believe we have a panel of banks and fintech guys here. The onboarding. So let's imagine I found the perfect unicorn, we're working together. All right, let's start, you guys come and tomorrow we start, we'll build together. So now this is where the fireworks start, basically. We generally underestimate a lot the barriers that fintechs are facing, regulatory barriers, the old infrastructure of the banks. And when I say old, it's like a secure old infrastructure. Let's forget that our money is there. It's not by mistake or by default that they have such a huge infrastructure. IT legacy processes, procurement processes, all these things are basically huge barriers that they need to cater for. I'll give you here an example. And I think that's one of my biggest failures as a guy that's trying to match together the banks and the fintechs. So I was mandated by a big banking group in Hong Kong to identify a fintech which was actually for corporates, cash corporates, how to fasten the cash collection cycle via my invoices. So it's basically proposing them a platform where they can track their invoices, track their payment. It seems easy like that, but it's very niche market. And we found the unicorn. We found the perfect match. A company already in production, already a large base of clients, using, these fancy words, AI, using a lot of data on cloud. So we faced the first issue. First of all, it took us probably 2 months to do a know your supplier due diligence. It was the procurement department. They basically were screening Microsoft. They had this huge list of the figures that you needed to give, the warranties that you needed to give in terms of security, review of the code, etc., etc. That was basically killing it already. So procurement was not really a big help for that. Once we've passed that, we talked with a lot of people. Okay? There was no governance in place. And I remember speaking with this innovation team in Singapore, very optimistic guys. We're setting up a cloud infrastructure. You guys will be able to plug your solution on it. We'll do a great job together. It's going to work. Fantastic. Well, guess what? The cloud never came first. These banks are still figuring out how to launch their own, even private clouds. They came up with an idea. Since we have issues with data, using that cloud, data privacy, why don't we do a proof of concept of that solution on premise of the bank? So now, can you imagine a company that already have a standard product, which is relying on historical data from the processing of invoices from all other clients, replicating an infrastructure on the bank's network just to prove that it works. And by the way, it works with thousands of other clients. So we had a lot of discussions, and basically we needed to do it. We came back, did a quotation, and guess what? It will take probably 6 months just to reproduce a little bit of the infrastructure on that bank and prove with a few transactions that this solution works in the bank. I think that was 2 years ago, but I think we ended up with a few meetings. Basically, it was really a fireworks at the end, just trying to justify the investment. We could not even justify the investment of a proof of concept. And that was a miserable failure. Everyone was frustrated. That was probably, let's be honest, a multi-million-dollar deal for the FinTech as well. They were pretty frustrated about what happened. Just because compliance barriers, infrastructure barriers, procurement barriers, basically all along the way. Now, recently, I've had the chance to do something slightly similar, but it was more on KYC, okay? Onboarding, client onboarding, for another bank, a European bank, still in Asia. When we came in, we had this accelerator team, basically, which was already set up. Already set up with experts in networks, experts in infrastructure, experts in data privacy. They even had a lawyer who could basically set up a framework to check with us whether we could do something or not in a short time frame, leveraging test set of data with real customer data within a set environment. That was great. We saved a lot of time doing that. We did an accelerated procurement onboarding. So these guys had a checklist specifically for FinTech. They cut the crap on all the financial data that you need to give, all the background of the customers. They focused on whether the solution fits in terms of technology stack, okay, in the big picture. So we can just launch it and see whether we can improve probably better later if there are security issues. That was great. The best part of it, and the reason why it took us 3 months and a half from the beginning to the go live of a pilot, is that they set up a virtual sandbox for testing. A virtual sandbox with a replication of the bank systems in a sandbox, in a cloud environment, that will allow us to come, to plug the solution, test with a few dummy data if the flow is correct, how the machine was reacting, will it fit my own bank personal processes, will it fit my compliance requirement, etc. And that made a real difference. Basically, we tested in probably 2 weeks. It takes 40 minutes to order a server, it takes 50 minutes to get the approval, and it takes an hour to start to launch a few data on the platform. So that was amazing. At the end, we integrated the team in DevOps mode, basically, with our client. We developed a prototype, which is more than a prototype, by the way. There is already an MVP. And now we're live in Hong Kong, Singapore, with that specific product. Even the FinTech had never seen that. This is one of the best cases. And obviously, we can draw a lot of conclusions from that. There's a lot to work on, especially in terms of cloud infrastructure, improvements in terms of compliance regulatory path to onboard a FinTech. But one of the best probably could be some actions, like what I show you. I don't have any stake in that. This is not advertisement. It's just a solution that I happen to work with, which has been launched with Santander Bank. They are proposing a replication of any infrastructure via a platform called Bbox, which is a playground. So it's a virtual sandbox. That's one of the things I was talking about earlier. These guys, you can bring everything. You plug your cable. There is a set of dummy data for all the bank. There are dummy workflows inside. And you can basically train, even some machine learning engines inside and test in real time. And that is the kind of initiative that can save a lot of time in that. So that was the third mistake, I believe, that we see a lot, that I've seen a lot. It's going a bit faster, sorry. So I'll probably conclude with a few positive notes, though. So what I'm seeing here, 2019 will be basically the year of partnerships. I'm working a lot on consortiums right now. We can see that there's a lot of things coming up. Banks are teaming up as well to get products out of the box, to get products on the market. Strategies are coming. I believe most of the banks who are represented here have teams on site developing, trying to match these fintech add-ons with their current existing set of products. Now, if we had to summarize a little bit some key lessons from that, we could say that as a bank, you need to probably work on aligning the partnership model with the business strategy. That's what we said at the beginning. Be innovative and open-minded in the detection of the good startups, and that goes with the right team, as I said earlier. The third, build an internal structure, a governance, a framework which is not killing the innovation, but fostering it by allocating the right budget at the right time. Modernizing the infrastructure via platformization, and work on data confidentiality. No, cloud is not evil. So we need to understand that. As a fintech, because actually my speech was pretty much geared toward the banks. But I could have actually done another speech, which is probably tackling a few mistakes that sometimes we do, as startups, when we're trying to integrate with a bank. Know the rule of the game, and actually identify the right use case. No wonder these big four gets 1,000 applications per year, because they know that these guys get insights from the bank and they know the use cases that will actually be powerful and impactful. Focus on the use case and not the technology. Doing blockchain, doing AI, sure. But what problem am I trying to solve? Focus on development of an MVP. Having to show a small product that works end-to-end is much better than 1,000 words, of course, and a big CV. But I believe these tend to be underestimated. Don't be afraid to say no. That company, we talked earlier, with that big banking group, at one point they were ready to do everything for free. No, you can't do that. You can't do that. If it takes 6 months to replicate a product that has been taking 3 years to produce, probably need to find other ways to do that. And obviously, pitch the right people in the bank and not only innovation teams, IT guys, etc. All right. So I believe we did a very quick overview on what's going on the market. I would be happy to continue that talk and speak a little bit with you guys. What do you think about the different mistakes that you have seen in the partnerships? In the meantime, thank you for listening to me, and see you later.
Oh, thank you. Guillaume, I was expecting a very spiritual talk from your end. The topic was the art of, coping up with failure. We'll take a few questions. If anybody has a question, I think now is the right time to ask Guillaume.
Yeah, that's
before he takes the last step. Any questions from your end?
I can come back on stage, actually.
Please do. Any questions? I'm glad we've got a few hands up. Yep.
Is there an example of a fintech that has really nailed this process? And if so, what have they done well? Because I think you focus more on the bank's loss, but I think the startups tend to lose a lot more.
From the startup perspective?
Absolutely.
Yeah. Okay, I have a very good example. So we're partnering with a tech company. I'll not call them a FinTech. They're more edu tech. So they're basically doing VR-based trainings. And we're doing it in the context of the banks. Why? Code of conduct, all right? Code of conduct today, how to teach executives how to behave in a bank. This is pretty much a gold mine in front of them. So basically, we started the journey together. They were not willing to speak with the banks, just for that set of problems. They're, oh, it's going to be too complicated, etc. The different thing that they did is that before willing to pitch anyone, they spent some time developing a product which were actually showable at the bank. They came with their own set of glasses. They come with their own people, like a few people. They flew a few people from Paris. They're in Station F. I don't know if you know Station F in Paris, which is one of the largest incubator in the world. They flew people. They did a big conference with a set of executives. Everyone has VR glasses. And their product was working. The people were trying the demo. They were not conducting the demo. They were just telling them, follow what you see on the screen. And these guys, they had their VR goggles, and they were following stuff, and you could see them laughing, or, you know, because they had put in place already a small decision tree to show them how to progress in that code of conduct training, all right? So that story for what? Because they came with a product that you could see. And this, they nailed it. The second benefit that I saw, compared to a few, they wanted to start small. They came with an idea of a training that costs, give or take, $10,000 US for for executive committee of a big bank. You know, it's not really a lot. And these guys were, well, yeah, let's do it right away. They started small, and they've proven that their technology was working. They could integrate with the banks. Now they have 20 or 25 trainings lining up with them. They started small. They proved that it works at the bank with a small scale. So I believe those are two examples.
Oh, that's great.